Welcome back, guys. Today I will be talking about two big Chinese stocks which has had earnings today and the effects of these two stocks on the Chinese markets and what it means for similar stocks in similar sectors. So, let's get started. So as y'all can see, Baidu's down around 8% after hours after a negative 1% day today. On the 1 month chart, it's down negative 7% due to the fact of the big downfall today after hours. But usually it was trading flat before earnings came out. On the 3 month chart, it's still positive 25%. 1 year it's positive again at 22, and 5 year is down around negative 35%. So why is this the case? Why is Baidu considered a growth company to many people, but yet the 5 year chart looks really, really bad? So as you can see here, Baidu always hovered around 180 to $150, and then on June 23rd, 2017, they had really good earnings, suggesting that they are a very good growth company and could even overtake Alibaba in the future. So their stock prices hung above $230 for a long time before coming back to earth in 2019 when Alibaba posted record numbers, suggesting that Baidu's overtakeal of Alibaba was not imminent. And during the March fall, it continued to fall to below $100 a share and quickly recovered back above 100, and now we sit at $115 a share. So what is Baidu? So Baidu is essentially Alibaba 2.0. What it does is that they they are a bunch of things, but more they are an internet search and online marketing company. So they sell services, they sell products. They're a big conglomerate type system where they provide advertising, they provide products, services, apps, music. So kind of like a Tencent, but a little bit smaller. They do have a market cap of 34, but their PE is well above 100 as seen right here. So Baidu did beat on the bottom and top line, but however, their guidance suggested a slight negative growth of 6%. However, the growth rate for year over year is 2%. It, this suggests that Baidu is not a growth company, and due to the high PE ratio, it's already pricing in growth. So when people don't see growth, regardless of beats on both top and bottom line, stocks tend to go down. A similar situation can be seen in Tesla. Tesla had a very, very good earnings, better than much better than expected, but it went down due to the fact that the PE ratio was already so high, and people were already pricing that in since it was a growth stock. So they were expecting 507 million USD with 146 per share in earnings. However, they got 3.7 billion and had an adjusted earnings of $2.08. So they did beat on earnings by quite amount, and on revenue they beat by a little bit. So these earnings don't tell me much besides the fact that Baidu's not a growth company as much as people have said it is. For example, Alibaba has a growth rate of around 11% a year, and their PE is still under 50. So I can't justify a PE ratio of above 100 for Baidu. But Baidu is taking market share, and Jack Ma has actually admitted that Baidu is quite an interesting player in this field. Now let's talk about another stock that has fallen after hours. So the second Chinese stock we have here is IQ. As you can see, it's down around 17% after hours and is down around 2% before earnings happened. So what is IQ and what do they exactly do? The best way to say this is that it's the Netflix of China. They do internet video streaming services, but also they also provide hardware like Roku for streaming services. They're also a social media platform. So one thing that's very interesting about some of these Chinese stocks is that they're well diversified in many areas. For example, Tencent does video games, it does streaming, it does a plethora of many other things. And the same thing can be said about IQ and Baidu and companies of that nature. So as we can see on the 1 month chart, it's down again 20% due to the big fall right here. The 3 month chart, it's still positive at 7%. 1 year is at 6%. 5 year is break even. So this is a relatively new company. It did IPO in March of 2018. Um, this company, it's really hard to research what they actually do specifically, and their numbers may be a little bit distorted. They do have a 7 billion market cap with a PE ratio of above 45. They posted pretty good earnings, but the problem I have with this stock that it was never profitable in the past whatever years, including public and private. They've never posted a profit. So their estimated was a negative 49 cents, and in actual it was a negative 0.28 cents. So between Baidu and IQ, I would rather choose Baidu if I had to invest in one. But at current valuations, I believe both stocks are still overvalued, or they don't provide a solid enough background or market cap valuation in order for me to invest. For me to seriously consider Baidu as a buy, the stock would have to go under $95 a share. And for IQ, I need to fundamentally understand why the company is valued at 7 billion and whether or not they are the Netflix of China, as current evaluations don't make me believe that it is. Thank you for watching and have a good day.